Welcome back. Still tuned into Midcap Radar, and as promised, we'll get in the management of AXISCADES Technologies. The Bengaluru-based company is a product engineering solutions provider, and it caters to the aerospace, defense, heavy engineering, automotive, energy sectors, among others. Announced its second quarter numbers last week, along with the acquisition of a Germany-based ad solutions for up to €5.5 million. To discuss all of this, Mr. Arun Krishnamurthi, who is the MD and CEO of the company, is joining us now, and about the outlook going forward as well. Mr. Krishnamurthi, good afternoon. Thank you so much for joining us. Well, quarter two has been really strong for you. Sharp margin expansion. You've seen growth across geographies in double digits, except for Canada. I just wanted to ask, what's the outlook going forward, especially in geographies like Europe, which saw a sequential decline, and we've been seeing a lot happening in that particular market as well, and Canada. Do you expect this growth to continue going forward? And if yes, what is the revenue growth that you're guiding for in FY23?
Yeah, good afternoon. And firstly, thank you for having me on the show. It's a pleasure to talk to you. So like you said, we had very strong quarter two results. We've grown 5.7% over Q1, 43.4% over the year-on-year over Q2 of last year. So the outlook for us is very good across all the sectors that we service, that you mentioned: energy, automotive, defense, semiconductor, and energy as well. We see very strong growth coming in. We grew at 17.6% last financial year, and we expect to grow more than that into this year as well. As far as the macroeconomic sentiment in Europe is concerned, in the near term, we don't see an impact on that. Our order book is pretty full, and we think we'll be able to grow well going into H2. As far as Canada is concerned, there is a client who had there was a project which closed early. But having said that, that is something which will come back for us. And over the year, we don't have any concerns that there's going to be degrowth on that account as well.
So growth more than 17%, that is what you saw last year. Can you quantify it for us? It'll be 20%, 25%, since the outlook is so strong.
Yeah, we don't do forward guidance on revenues, but let me just say that it will be better than what it was last year. And we have a very positive trajectory with all our clients and all our verticals.
Can you at least tell us if it will be double digit?
It will be double digit, yes. It will be more than 17.6%.
Okay. So the growth rate for FY23 will be more than the growth rate of FY22, which was about 17%. What's the outlook on margins? This quarter, you're tracking margins, EBITDA margins of 20%. Is there scope to expand on these margins?
I think this quarter we saw a heightened margin because there was a one-off in one of our defense businesses.
Okay.
But if you normalize the margins, it should be at about 15%. And again, as compared to last year, we will see growth in margins as well. So again, a strong performance on the profitability front as well.
And these normalized margins of 15% that you saw in Q2, is that the run rate for the rest of the year and FY24 perhaps?
Yes, it would be about 15% for the rest of the year. Obviously, okay, we will be looking at measures to improve the profitability further because our stakeholders always want to do better. So we will be looking at how we can improve that going forward. But for this year, yes, it would be at 15%.
Okay, so that is about margins and top line. You have made an acquisition this time around. I wanted to understand what the synergies are there. €5.5 million is the revenue that company did in FY21. What kind of growth rates has it been seeing? And once it actually gets completed, the acquisition that is, will it improve your margin profile? What are the current margins that this company is making?
Yeah, so actually there's a couple of acquisitions. So we're just completing an acquisition of a company called Mistral,
right,
which is in the embedded space, and they work in semiconductors as well as defense. So that gives us a lot of capabilities on the defense side. And of course, it adds a new vertical for us on semiconductors. So that's something that will get completed in this quarter, in Q3. And as far as the new acquisition is concerned, this is a company in Germany. It's a company called Ad Solutions. We will be completing the acquisition in Q4. And the reason we are acquiring this is that they have very strong automotive capabilities. They are embedded with one of the biggest German OEMs. And we have ambitions to grow automotive. We have ambitions to grow the Germany market. And that's why it makes a lot of sense for us. It's a company which is actually quite profitable by German standards. So they have early double-digit margins. And from that perspective, we will look at how we can grow the business together, bring in synergy revenues, and also take them globally to the other regions that we are servicing.
So early double-digit margins. So since if it gets completed, the acquisition, margins will see an impact for a while then.
They will see an impact, but we see enough opportunities in automotive. In fact, I'm sure you're aware that the resource market is quite tight. And the more people we can get, the more business we can do. So we are quite optimistic that the opportunity is there. So we will be able to capitalize on that.
Can you talk a bit about your balance sheet? Because you made that Mistral acquisition last year. Now you've got another payout of up to 5.5 million euros. And I believe you have a debt of nearly 200 crore rupees, net debt. Take us through your balance sheet situation, and you're looking to raise money to bring down your debt. How are you going to make these payouts?
Yeah, so firstly, the acquisition that we are planning with Germany, that will be spread across 3 years. So it will be done in 2 phases. So we obviously spreading it out. It's not going to be a one-shot kind of thing. There are performance criteria also that we have sort of put in place. You're right about the debt. The debt that we have is because we needed to complete the Mistral acquisition. And we are in talks with financial institutions, and we're sort of confident that we'll be able to service that and raise money for it. We have also appointed Edelweiss as an investment banker, and this is to raise growth capital for us because, like I said, the opportunities are there. The market is very robust and vibrant, and we're looking at growth capital to sort of help us invest in our R&D labs, hire senior people, etc. That's the way forward as far as the balance sheet is concerned.
So 200 crore rupees of debt right now. I wanted to understand, in the Mistral acquisition, how much have you already paid? How much is left? And have you acquired the entire stake in that particular company, or is some left?
Yeah, so we have acquired 60% ownership of Mistral as we speak now. And the path to 40% is over the next 3 months, like I said. So we will be 100% owners of Mistral. And we have serviced about, I would say, 2/3 of the company already. So we are raising money to finance the rest of the 1/3, which should be completed in this quarter.
So 100 crores is what you're planning to raise then for the rest of the money that is to be paid for Mistral?
That's great.
And that will be done in this quarter?
Yes, it will be done. Yeah.
So the money that you're looking to raise, you said is 100 crores, right?
Mm-hmm.
But that will be used to pay off and buy the balance portion of the Mistral debt. Where will you get the additional money that you want to make senior level hires, invest in R&D technology?
So actually, there is some component of the 100 crores which will go towards Mistral.
Okay.
There is other sources of funding that we already have, which we will be using. So part of this 100 crores will go towards completion of Mistral, and the rest of it will actually go towards the senior hires and labs that we want to set up.
Okay, so last question on the balance sheet and the debt, then what does it do to your debt? Because you have made one more acquisition, not the entire part of that 100 crores will go for Mistral. So will you be taking up more debt, or debt is at these levels? 200 crores is the peak level.
Yeah, this is the peak level. We actually see a good profitable business road ahead. The reason we are making these acquisitions is that it will multiply the opportunities that we have. And we are confident that, with that growth trajectory, we'll be able to generate more cash and sort of take the company in the right level. So we don't see more debt coming in. This is really to sort of be a force multiplier on the business that we already have.
I just wanted to follow up on that. So 100 crores that you'll raise will be used, some for Mistral acquisition and the rest for senior level hires. What about the Germany acquisition that you're making? How will you fund that?
So like I said, that will be spread across next 3 years. We will have multiple phases. So there is going to be no immediate payout. So that is well under control. Yeah.
We'll leave it to that. Thank you very much for joining in, and look forward to chatting with you more in the future. That's the word coming in from AXISCADES.